Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, the U.S. markets, again, mixed, whereas the TSX enjoyed something like a 12-day run. What's the story there?
Yeah, we've seen the Toronto Stock Exchange really outperform the rest of outperform the U.S. markets, and I think a lot of it has to do with resource stocks. Obviously, the TSX very resource heavy, and we've seen this happen many times before during the end stages of a bull market in U.S. equities. We saw the Toronto Stock Exchange usually perk up and start to outperform. We see resource sectors, resource stocks start to outperform, and that's where the money is flowing. You sort by sectors of, what sectors are up the most and down the most over the last few months, and really precious metals are shining. So I think we are coming into a point here where we're going to continue to see, I think, resource stocks outperform and be a little more sheltered. When we have a down day in equities, we're seeing now money moving into resources as a safe haven play. So going forward here, I think the resource stocks are going to continue to outperform, and I think they have potentially a couple months of doing that going forward. So they are the hot sectors right now, and they're holding up the best, especially during weekdays in the stock market.
Is that one of the reasons why we're seeing these mega mergers in the gold industry?
Oh, potentially. We usually see this stuff happen before there's some type of big run, and I think, things are getting accumulated. I think precious metal sectors are getting close to another mega run. I mean, I don't know if that mega run will happen this year. It could fall into place, after we have a bear market in the stock market in general, because typically during a bear market, we'll see precious metal stocks get sucked down with the falling tide. They go down with the rest of the market. But, I wouldn't look too much at the major takeovers as that being the case. We've seen it happen before. Insiders aren't exactly technical analysts or focus on timing the markets. They go, when things are good, people buy more, and that's usually near the end. So, I think it was Goldcorp removed all their hedges, back in 2011 or something, right at the worst possible time, and then the markets collapsed. So, looking at the mergers and takeovers probably isn't always the best way. They're not, focused on trading the markets and what's going on. They're looking at financials, but the stock market typically leads financials, and the stock market is getting weak, and financials will usually come into play several quarters later and fall. Meanwhile, the equities markets will have already fallen.
There's debate about whether the mega mergers are good for the junior gold miners. What's your position on that?
I'm not really sure if it would be good or not for the junior miners. I don't pay too much attention to how many people are out there, how many companies, and who's getting bought up or things like that. That's not where I focus. So I'm not sure how that would play out in the grand scheme of things. Can't really give you any insight on that one.
Any thoughts on palladium and platinum?
Well, we've definitely seen palladium really muscle its way up. It's been on this steady climb for several months, working its way up and pushing to some pretty significant all-time highs here, tagging 1,400 and pulling back now this month down to 1,300. But it's just been on fire, and I'm not sure what is really fueling that big rush. I'm not sure why it's going up, but I mean, it has really been outperforming, and all the signs are there right now that it's actually overbought. The way that it's hit 1,400 and reversed back down, I think it could be a little bit done for a month or two, but it's leading the way. It might be the new major shining star for precious metals going forward, and this could just be the start of it. It'll be interesting to see. I'll have to do some research and see why palladium has really taken off. What has changed there? But it's very interesting.
Well, China, of course, is trying to crack down on air pollution, and you need palladium for catalytic converters.
Right. Yep. That could be it.
We'll have more with Chris Vermeulen right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what do you see happening in crude oil?
Well, crude oil, it's starting to make a comeback. The last couple of weeks, prices rallied up to the December highs, and they're more or less testing key resistance. And yesterday we saw, last three trading sessions, we saw crude push up to that upper resistance level, got reversed down yesterday, and I think we're going to see crude oil struggle here for a little bit. I think we could see it trade sideways for a week or two, but then I think it'll be poised to continue to move higher. I do feel as though we could see 60 and 62.50 as the next stop. If it can, once it does break out of this level, I do feel as though it'll break to the upside. But again, it needs a little bit more of a consolidation at this point, before I see it moving much higher.
Natural gas has fallen quite a bit. Why would that happen when, the East is in a big cold snap?
Yeah, I was in Quebec last week, and it was minus 30 without the wind chill, and it was intense. I haven't been in that cold of weather in a long time. And natural gas typically moves just like I mentioned before. The markets typically move before the news, and we had the huge weather-based prop back in November, the pop in price, Farmer's Almanac pointing to very cold winter, and of course natural gas rallied for 2 weeks, and we've seen it fizzle back out. That's typically what happens to the price of any stock or commodity when it's more or less news or weather-based. And so I think the cold weather was kind of factored into those initial traders that pile in when they hear news like that. And right now we're just kind of fizzling out. I still think natural gas is bullish. I do have a $4 to $4.20 target on it. I think it's still trying to build a base. This recent pop in the last week and a half has made for a much larger base. I would have preferred something not quite as big of a pop in price, simply because when it does break out, it doesn't give you a whole much more room to run to the 4 and the 4.20 mark percentage-wise. But overall, natural gas, I am still bullish. The very long-term chart of natural gas is extremely bullish still. I think it's got potential to continue to move much higher from where it is. I think it's in the early stages of a very long bear market. So I do see much higher prices going forward a year from now.
We'll have more with Chris Vermeulen right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features to our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the Pink, symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what kind of action do you see with the U.S. dollar now that Europe has found a way to skirt U.S. sanctions on Iranian oil by buying that oil using non-U.S. dollars?
Yeah, well, the U.S. dollar, it's been weak the last month or so, and we've had a little rally back. Overall, the U.S. dollar to me is still strong. I think we're going to see around the $98, $100 mark on the U.S. dollar index. It is still making from 2008 lows. It's still making a series of higher lows and higher highs. So it is still in an uptrend. And I think this recent low we saw about a week and a half ago might still be a fairly significant low. And we could see the U.S. dollar continue to move up to that $100 mark. I still think there's I think there's some more upside in a positive bias in the dollar simply because interest rates are still creeping their way up. That's not over yet. And it's still seen as a safe haven currency. And I think as fear continues to enter the overall stock market, slowly creeping in there, people are going to naturally want to move to the dollar. Other countries want to move to the dollar. So I'm still in favor of the dollar moving up. If we do hit that $100 mark, it'll be a very significant resistance level. And depending on how it hits that level, if it does a big reversal type of candle on the daily, weekly, or monthly chart, that could signal a very strong correction in the dollar going forward. And it could very much so spark a huge rally in precious metals.
Germany is said to be teetering on the edge of recession. Italy already in a recession. What does that do to the European markets and their influence on energy prices?
I'm not, obviously if we go into recession, we see everybody kind of cut back in spending, traveling, all those things. It's not good for energy in general. We've seen a huge correction in German stocks. They are in a full-fledged bear market. They've dropped significantly. I mean, overseas markets, I think they kind of lead what happens over here in the U.S. to some extent. And I think we are going to fall into a similar situation where we're going to see the U.S. stock market become very weak. And, crude oil has been, it could be a big reason why crude oil has been under so much pressure in the last year. We really were starting a new bull market in crude oil. And then, of course, mid last year, it just gave it all up with a never ending, 2-month, 3-month sell off in price. And that could be very much so because of overseas. They have been in a recession. All those markets, you look at all the stocks for all those different countries and indexes, they've been under serious pressure. And of course, the U.S. isn't really the whole world. You see, it's just one country out of all these others that are in recessions and contraction. So that could very much so be the problem with crude oil selling off.
So, Chris, what's your summation of what's going on out there?
Well, I think looking forward here, I think we're going to naturally see commodities, the commodity sector in general and resource stocks. I think we're going to see them hold up fairly well, and I think we're going to see some type of rally that lasts, a very strong rally that could last a couple of weeks to potentially a couple months, looking forward from today. I think they're going to that's where the money seems to be rotating into the sector. I think the big tech stocks, I think that big wave of them being the leaders is more or less over. We're not seeing money rotate in. So I think focusing a little more on the resource side of things, I think they are going to start to outperform in the Toronto Stock Exchange. And when they do outperform and get up near serious resistance levels in a couple of weeks or a couple of months from now, I think it could be a serious turning point in the overall market that will pull the rest of the market, including the commodities, back down.
Chris, thank you so much for being on the show.
Hey, always a pleasure, Jim. Thanks for having me.
My guest has been Chris Vermeulen from thetechnicaltraders.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have questions for Chris or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of How Street Media Incorporated.